What if I told you that the absolute most critical financial decision of the year is currently hiding behind a completely manufactured wall of short-term macroeconomic noise, specifically designed to panic the ordinary retail investor into silently surrendering their physical assets directly into the waiting hands of the massive global sovereign central banks? Welcome to Money's Hidden Past. Rich people lied, we fact-checked. Today we're stripping down the absolute current reality of the global gold market and exposing the exact mechanical forces driving the massive financial shifts of June 2026. If you look at the highly chaotic modern financial charts, at this exact moment you will see that the spot price of physical gold has pulled back significantly, settling securely around the $4,500 per ounce psychological support level after an absolutely explosive and completely historic run to massive all-time highs. The sudden downward price action immediately triggered a massive wave of global financial anxiety, convincing the highly impatient retail investors that the massive golden rally was permanently over. But making a long-term financial decision based entirely on the daily fluctuating charts is an absolutely mathematically disastrous strategy that always enriches the institutional trading firms. The decision to either buy or sell your physical precious metals right now hinges entirely and completely on your personal long-term structural investment horizon. Because the market is currently caught in a massive high-stakes psychological tug-of-war between the short-term institutional bears and the massive sovereign long-term bulls to truly understand where the global market is mathematically heading. Next, we first have to aggressively examine the absolute bear case for immediate short-term pressure, because in the immediate future, the yellow metal is facing significant structural macroeconomic headwinds driven almost entirely by the relentless and unyielding strength of the United States dollar. When the Federal Reserve intentionally keeps their baseline borrowing interest rates persistently high, they create a completely toxic environment for massive alternative non-yielding physical assets. Because a heavy bar of a physical gold does not pay you a quarterly corporate dividend, and it absolutely does not generate a monthly stream of reliable passive interest income, when the institutional bond market is actively offering incredibly high and guaranteed financial yields, the highly calculated professional traders will immediately pull their liquid capital out of gold and park their massive billions safely inside the highly profitable government treasury bonds, creating a severe and immediate downward gravitational pull on the global spot price. This severe downward momentum is aggressively multiplied by the highly leveraged digital paper markets, where massive institutional trading desks rapidly sell millions of completely artificial gold derivative contracts, creating a highly coordinated and completely artificial temporary market sell-off across the board that is intentionally designed to violently trigger the strict stop-loss orders of the retail investors. The complex technical indicators in the highly leveraged institutional futures markets currently show that the professional Wall Street traders remain incredibly and deeply cautious. They are actively anticipating continued near-term weakness and a complete lack of immediate upward momentum, choosing to patiently wait on the financial sidelines until the global macroeconomic weather eventually changes. This creates a terrifying psychological environment for the ordinary working-class retail investor who completely abandoned their fundamental logic and aggressively bought into the massive public hype, purchasing their physical gold directly at the absolute highest peak earlier this year, driven entirely by the intense biological fear of completely missing out on the rally. Now those exact same deeply impatient retail investors are watching the price slowly decline, and the intense social anxiety of financial loss is completely hijacking their rational brains, forcing them to blindly panic and sell their physical assets back to the open market, locking in a massive personal financial loss right before the next inevitable upward cycle. This brings us directly to the absolute bull case and the massive long-term mechanics, because successfully avoiding the psychological trap of buying at the absolute peak is just as mathematically important as deeply understanding the underlying market mechanics during a severe pullback, where the true generational wealth is quietly and systematically accumulated by the patient elite. While the completely distracted retail investors are panicking over the short-term interest rates, the massive structural macroeconomic forces supporting the long-term fundamental value of gold remain absolutely and incredibly strong across the entire interconnected global financial system, driven by players who possess an infinite supply of liquid fiat currency, the absolute largest and most aggressive buyers currently operating in the entire global market are not the speculative day traders or the massive corporate hedge fund managers. They are the highly secretive and deeply calculated sovereign global central banks who are aggressively executing a massive coordinated diversification of their national wealth. The massive sovereign nations operating across the Eastern Hemisphere and the global South are deeply terrified of keeping their entire national wealth securely locked inside the United States dollar, because they have actively witnessed how a heavily weaponized and centralized fiat currency can be instantly frozen or completely sanctioned during times of massive global instability. To permanently protect their national sovereignty and secure their absolute global purchasing power, these central banks are aggressively diversifying their national reserves away from traditional fiat currencies and actively converting their massive digital paper wealth back into unyielding physical gold, creating an absolutely massive and entirely unprecedented sustained global price floor economic projections. Indicate these sovereign central banks will execute massive continuous purchases, acquiring an absolutely staggering 755 metric tons of physical gold in the calendar year of 2026 alone, regardless of the daily fluctuating price, because they are absolutely not trading for a quick profit. They are trading for national survival. The global central banks are actively preparing for a massive systemic fiat currency devaluation, which is why they are aggressively trading their dying digital paper dollars for physical gold, because an ounce of gold can absolutely never be printed out of thin air by a politician, and it carries absolutely zero fundamental counterparty risk in a highly fragile global economy. This absolutely relentless and completely price-insensitive sovereign demand is further accelerated by the massive and ongoing global demand for geopolitical insurance, because the entire world is currently navigating an incredibly dangerous era of global instability, specifically highlighting the deeply complicated and ongoing regional tensions in the Middle East, when international trade routes are severely threatened and global supply chains begin to aggressively fracture the massive institutional wealth. Managers completely lose their faith in the traditional corporate markets. They actively seek the ultimate historical safe haven asset to protect their multi-billion-dollar portfolios. And physical gold has perfectly served that exact structural defensive purpose for 5,000 years. This is exactly why the absolute largest and most powerful financial institutions on Earth completely ignore the temporary daily dips and the highly chaotic short-term macroeconomic noise, because they possess the necessary patience to look entirely past the current calendar year and focus strictly on the undeniable mathematical reality of the shrinking physical supply. Despite the significant downward dip in the global spot price, this exact month, massive legacy institutional players like JP Morgan and the prestigious Swiss banking group actively maintain their incredibly aggressive and highly optimistic year-end financial price targets, projecting massive and sustained future structural growth for the entire global precious metal sector. Their elite internal financial analysts are publicly forecasting that the price of physical gold will aggressively push toward the massive $5,400 psychological level, and potentially even breach the staggering $6,000 per ounce absolute ceiling. By the late winter of 2026 or the early spring of 2027, when the most powerful and highly connected commercial banks in the entire global economy are loudly telling their wealthiest private clients that the asset is going to significantly appreciate, you have to completely stop listening to the terrified retail investors panicking on social media and start paying close attention to where the absolute smartest money is quietly moving. Which brings us directly to the absolute final verdict for the ordinary working class investor. If you are currently holding physical gold in your private portfolio, right now, selling your assets today means completely exiting the market during a highly temporary dip, driven entirely by short-term institutional anxiety over the baseline federal interest rates. It is incredibly easy to let a sudden and severe short-term downward price drop push you into an entirely irrational personal financial decision. But choosing to sell your physical assets right now completely guarantees a mathematical loss. Right before the massive sovereign central bank, demand eventually outpaces the current macroeconomic noise if you do not currently own any physical gold and you are looking to enter the market. This current downward price action offers a completely classic and highly lucrative opportunity, allowing you to essentially purchase the absolute ultimate safe haven asset at a massive temporary discount, before the next aggressive cycle of international monetary devaluation completely destroys your purchasing power. However, you must possess a strict personal investment time horizon of 6 to 18 months, because structural macroeconomic shifts completely refuse to operate on a convenient daily schedule. You must allow the massive fundamental demand from the global sovereign central banks to completely overpower and actively consume the temporary hesitation of the professional day traders. Here is the absolute bottom line delivered as simply and as plainly as humanly possible. If you already quietly own the physical yellow metal, you must absolutely not sell it. You must completely ignore the highly sensationalized daily headlines and the aggressive media panic and patiently hold your structural wealth exactly where it is currently securely sitting. If you do not own the asset, yet you need to aggressively consider buying the dip, because the absolute largest and most heavily capitalized commercial banking institutions on Earth fully expect the value of the metal to rise significantly over the next calendar year as the traditional global fiat system continues to slowly buckle under its own massive debt. The highly direct answer to the precious metals question is this: you should aggressively buy the current discount if you fundamentally want into the global market. And you must absolutely hold the line if you already physically possess the underlying asset. But you must completely avoid the devastating psychological trap of selling into the current temporary panic. The wealthy elite completely understand that building an indestructible and permanent financial empire requires the absolute emotional discipline to do exactly the opposite of the terrified majority. They quietly buy the physical assets when the ordinary working class is completely panicking, and they patiently hold those exact same assets when the uneducated public desperately wants them back. If this deep dive into the massive structural mechanics of the 2026 gold market and the terrifying reality of sovereign central bank accumulation fired you up about deeply understanding the literal foundation of the global economy, then do me a massive favor right now. Smash that like button to let the algorithm know this factual historical conversation matters. Share this video with every friend and family member who needs to understand how the real financial world operates. Let us keep exposing the true mechanics of wealth and power. I will catch you in the next one, where we break down the next hidden chapter in the long history of money and corporate authority. Until then, stay informed, stay skeptical, and remember that sometimes the most profitable financial action you can ever possibly take is to simply sit quietly and completely refuse to participate in the temporary public panic.